Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today we're going to talk about an interesting development that might signal a turnaround for the resource sector, in particular the gold sector. And I'm going to introduce another promotion from the Bottom Fish Collection to the Favorites Collection.
Any new developments affecting your KRO 2025 Favorites collection?
Well, if you look at the KRO 2025 Favorites Index, there's nothing to really observe. It's up 4.5% as of Thursday, January 30th, which is down from what it was last week. Gold is up 5.6% for the year, and the TSX Venture Index is up 2.6%. Now, the reason the favorites group has sort of sagged a bit is that the resource juniors did suffer some collateral damage from the $1 trillion meltdown that the Magnificent Seven and other companies suffered on Monday when the market reacted to news that a Chinese AI startup called DeepSeek had managed to accomplish the same sort of AI functionality with a much smaller computational requirement and without using the super duper expensive chips that NVIDIA makes and which everybody expects the whole AI boom to continue to consume forever and ever. So that wiped out $600 billion of NVIDIA. But after a day or so of hand-wringing about this, there were others that pointed out that, this is actually a good thing for the AI thing, because do we really want these Magnificent Seven companies to end up dominating all of the AI future? This idea that there may be many distributed desktop computers running this much more efficient AI, doing the AI, that could actually broaden the base for the whole artificial intelligence revolution and keep people from worrying that a handful of companies that have, specialized in kissing the ass of Trump and creating an oligarchic circle around him, that has people a bit worried. So this Chinese DeepSeek development is potentially a positive thing. And as far as the market selling off all these utility companies that are building energy capacity to fuel these data centers, I don't think we need to worry about that. I think the air conditioning need as the future continues to heat up, that's going to suck an awful lot of electricity. So these guys should not pause back just because maybe there won't be as much AI-related consumption. And of course, there's always the possibility that Trump does indeed make America the crypto capital of the world, and these Bitcoin mining machines will have to work overtime and suck up a lot of electricity, maybe inflict some brownouts on the people who are relying on air conditioning to keep themselves clean. But that's not really the big development. It's a sign that potentially the general markets are vulnerable to a breakdown. And again, if that does happen, we'll get rained on by that bad weather, but only temporarily. The big development this week was news on Thursday that the London Bullion Market, the gold that it delivers, usually it takes only 2 or 3 days to deliver it. It now has a 4 to 8 week delivery time. So if you request your physical gold from the London Bullion Market vaults, it's now going to take you 4 to 8 weeks. And why is that the case? Well, apparently it is because U.S. Investors have been requesting delivery of physical gold during the past 2 months. So why is this? Is there a sudden surge of U.S. investor interest in physical gold? Well, some of the explanations are that these investors who write these futures contracts, they're worried that Trump might actually impose tariffs on the import of gold. Now, that makes no sense because gold is an internationally priced asset. Doesn't really matter where it comes from. It makes no difference whether it's mined in the United States or elsewhere. But just because Trump hasn't thought of a dumb idea doesn't mean that he won't come across it and actually deploy it. So this is a a potential problem for these traders who write these futures contract for, say, delivery in June. If they end up having to deliver on the contract with their just-in-time mentality, they've been sort of, okay, well, we'll figure out, we'll get the gold in the week before that and deliver it. Now they've become worried about this 4 to 8 week delivery, and so the price, the futures price has developed a $60 premium, which is supposedly related to this anxiety. But I think the real reason is that you look at the timing. This apparently started 2 months ago. Well, gold last year rose 26%, starting from its low of mid-February, and the strength has been incredible. You look at the GLD ETF, and it managed to lose 200,000 ounces last year. In fact, last week it managed to lose 609,000 ounces. So clearly there has been no real American interest, at least not at the retail or institutional level where you would buy a GLD. Buying physical bullion is a different matter. I think what's happened is that the smart money has started to get the heebie-jeebies in the past 2 months about where Trump's policies are going to lead the American economy and all kinds of things. And they've started to believe that this uptrend in gold is real. And I think, when you look at the central bank reports of their official purchases and sales, the amount that they've accumulated during the past year really does not explain the strength of gold going, through $2,000, gaining 26% by the end of last year, and even now it's continued to go up. It's at its record high. That gold has been flowing to the global south, to the global east, and it's not going through the official channels into central banks. It's going through unofficial channels into these countries. They're basically hedging against some sort of catastrophe involving the U.S. dollar. And it also reflects concern about, do we really want to own U.S. debt instruments, treasury bills and so on, like we have done forever and ever, and now are not thinking it's such a good idea. So this week, and that there's more to this than just these traders and futures contract writers fixing what is a temporary little problem, can be seen in the fact that Agnico Eagle this year, it is up 22% from the start of the year compared to gold's 5.6%, and it had a $5-6 gain on Thursday. And one of the things that's been troubling over the past year is I have this gold producer index, and the gold producer index itself, with compared to the normalized gold price from when I kicked it off, they have at best been tracking the trend. And gold producers are supposed to be a leveraged proxy for gold. That's what they have historically been. But they aren't serving that anymore, and there's 2 basic reasons for it. One is the market thinks gold, like it did in 2011 to 2013, is going to fail and drop back below $2,000. So maybe investors are not buying the current gold price as real. The other is that when gold did that run to towards 2000 in 2011, the gold producers ended up making a lot of big mistakes, putting things into production that were premised on gold going up forever and ever. And so they are now held with disdain by the market as being incompetent. But during the past 5 years, they have been ultra cautious. They themselves have not really believed that this gold trend from the last year. So what we have is a perceptual lag. The market thinks they're still incompetent. It may also think gold is going back down. But if we start seeing even Americans start buying gold as a hedge against a catastrophic future, and it blasts through $3,000, these producers, they've got paid for all their mistakes already. They haven't been making new mistakes. So what I'm going to be looking for is when that index trend line punches through the gold trend line and starts going, signaling that the gold producers are once again the proxy, that's going to be the signal. And right now, if you don't really want to bet on any of that, my recommendation is you look at the favorites list. There are two stocks on there, Vista Gold Corp and Westfault Mining. They are both shovel-ready, ounce-in-the-ground projects that ain't even near fair pricing for what the potential is. I mean, they're not even priced fairly for the $1,800 base case prices that they used for their feasibility studies a year or so ago. So they have been inching up, but until we see that gold producer line smash through the gold trend line, signaling that the market once again believes that we are in a gold bull cycle, that's when you'll see a slingshot effect. So the smart thing to do now with your risk portion of your portfolio is to buy Vista Gold, buy Westfault Mining at the current prices. The worst that will happen is nothing. If gold does go back and the gold producers fail to become this proxy for gold again, nothing will happen. But if all of this starts to unfold and we go back to a more traditional perception of what a gold bull cycle is all about, then you will see these things go up 5 times in price very, very rapidly. So, and also, the others, the explorers and the more early stage developers whose ounces in the ground are still at PEA level and maybe like stale PEAs 5-6 years old, they haven't really moved yet. But on Thursday, the traded value of the TSX Venture listings, it was the highest since mid-November. So it's not a trend yet. It's just a blip. But I felt it yesterday that this thing that's happening with gold, this may be a turning point, and we'll be watching very closely for validation. And of course, where I've had a lot of fun with my subscribers is with the bottom fish collection and this new, what I call the Tudagon District rethink play. When AMARC put out those results on January 17th, signaling a significant gold copper discovery for the Tudagon region, something that is 5 times better than has ever been witnessed there before. I put AMARC resources graduated them from bottom fish to favorite last week. And this week I have promoted TDG Gold Corp from the bottom fish collection to the favorites collection, because this play, it's the sort of thing that can inspire investors that, yes, good things can happen in the junior exploration sector. A junior that has nothing can suddenly end up having something very significant because they're spending money on drilling holes.
Why did you promote TDG Gold Corp from bottom fish to favorite?
TDG Gold Corp was made a bottom fish for the 2025 collection, basically repeated from the 2024 collection, because they have a significant land position in the Tudagon district. It's to the north of the Joy project, where Freeport is earning potentially up to 70% from AMARC resources, where on January 17th they announced the Aurora discovery. The Aurora discovery has an IP anomaly which appears to project right onto the what they call the Baker Shasta project of TDG Gold. The Aurora discovery, you do some very crude back of the napkin calculations. You can see with this grade of in a range of 1 to 4 gram per ton gold. If you use 2 gram per ton gold, you can see sort of a potential 10 to 12 million ounce in situ potential resource. And this is just with the 3 fences of holes. We still have to get the southern fence, east-west fence of holes. That will probably come next week. But there's also a couple holes to the north and south, especially if the northern one ends up delivering similar grades. Then we know there's a robust system there that strikes onto the TDG ground. And This is what attracted Skeena Resources this past week. They decided to put up a substantial amount of money. TDG Gold has been running on fumes forever. They've been focused on the Shasta deposit. They put out a resource estimate to update. They've done 3 since they acquired the project in 2021. And the latest for indicated and inferred is 27 million tons of 0.9 gram gold and 32.6 gram per ton silver. That's 781,000 ounces gold and 28 million ounces silver. And they put that out in early January. It's an open pitable scenario. It's an epithermal system. And this thing has been the focus since the early 70s. And the Baker project, or mine milling complex, which is a little bit to the northwest within the property, that went into production way back in the 1960s. And there's a very convoluted history that I'm not going to get into here. But in 2021, this new group got hold of this. They optioned a bunch of additional ground, so they have almost 40 kilometers of that, of the north-south portion of this 100 kilometer by 30 kilometer Toodoggone district, where the nearly billion tons of Chemes cluster of deposits. Part of it's already mined out, sort of 0.2% to 0.4% copper, 0.4% to 0.6% gram per ton gold. That was sort of like the exciting thing, 20 years ago when El Condor discovered that. Now we have a total rethink, because this grade that we're seeing, it reminds me a lot of what Robert Friedland's Ivanhoe Mines did way back in 2001 when he acquired the Oyu Tolgoi project from BHP. This was something 438 million tons of 0.4 something percent copper with a little bit of gold. The Soviets had found it. BHP had ended up with it. They couldn't see how it would work as an open pitable thing. So Friedland took it on. He was a big early anticipator of the China super cycle and what that would do for future metal, metal prices. But then he also put his people to work doing deeper geophysics and testing some of these targets. And out of that emerged a Hugo Dummett zone. So instead of this being 0.4% copper system with a modest gold credit, suddenly it was a 1 to 3% copper system with a significant gold credit, and that completely changed the economics of that. He ended up being right about the real copper price going up. So even the open pitable stuff that didn't work in 2001, it's now part of going into production. But what we're seeing here in this Toodoggone district is that we're seeing these consistent 1 to 4 gram gold grades with a sort of 0.4 to 0.9% copper grade. This is something new and different for this region. And there's a lot of head scratching going on. Okay, what caused this? Where is it? And it's in an area that is kind of what I call an exploration desert. And there's Hazelton Group rocks, which are the younger volcanics that sometimes get penetrated by the systems that create these porphyry deposits. But usually at surface, it's pretty uninteresting. And in this area, it's mountainous, so it's expensive helicopter supported work to do anything there. So it's generally been ignored in the last 30 years by explorationists. And the Aurora discovery, it basically is semi-blind in the sense that what they saw at surface was all covered with talus and scree from the ridge lines that flanked this valley, so they couldn't sample any bedrock. There's no interesting geochem. And when they finally get through the talus and into the bedrock, lo and behold, it's very mineralized. In fact, it looks like the system has been, partly eroded away, flushed down into the valley, and then buried with debris from the barren sides of the valley. And then they go through this Hazelton Group rock into the Black Lake intrusive suite, which is also mineralized. And then it stops at about 150 to 200 meters. And they haven't really explained what that is, but there may be a later stage intrusion that came in and simply cut that off. But that would only have been a local effect. And that's why people are curious about what these holes to the north and south of this magnetic anomaly that seems to cut through the area where they have the grades. If those are also mineralized similar to what they have in the holes that they've already reported, then we know there is a very, very large system there. And this is what has got people excited about TDG Gold Corp. And some of the backstory is that historically the focus has always been on the gold, the epithermal gold. In parts of it, it's low sulfidation epithermal, which means it probably was created by later intrusive dikes that came in. Low sulfidation epithermal systems have a boiling zone that ends up being what precipitates the gold out of solution. So it has a limited vertical extent, but there's also evidence of intermediate epithermal gold. And those are created peripheral to a porphyritic intrusion system. While it's sitting there cooking, the fluids leak farther away from it and will also create gold deposits with a much greater vertical extent than, say, the low sulfidation epithermal type. And when the new group took over in 2001, they've been focused on, let's put this epithermal system in that had been sort of mined on a modest scale previously. Let's put it into production as a large open pit operation, feed the Baker mill that's on the mine lease, that's got all the environmental stuff already taken care of from before. But the market hasn't really cared about that. And in 2023, Andrew French, who is with the Gold 2000 Fund, one of the shareholders, he stepped aside as chairman and let Stephen Quinn join the board. And Stephen Quinn has quite a track record of companies that he's been involved with. He was the driving force behind Perpetua Gold Corp, Stibnite, bringing it through to a feasibility study. And he's been pushing for a change in perspective from being focused on the gold, silver, epithermal stuff to looking at the bigger picture of the copper, gold, porphyry potential. And the interesting thing about this whole region is there are these sort of north, northwest, south, southeast structures parallel, several of them. The Saunders is the one that goes through the TDG and Joy ground. There's another one to the east called the Pillar Fault, which goes also through the Joy ground and the Finlay ground and all the way down to the Chemist system. And these things are important, but they're not the actual source of the mineralization. The source seems to be these perpendicular cross structure. They call it an extensional setting, which means things sort of stretch apart and it enables intrusions to come in and fluids to come through. And so it's these perpendicular structures going across. One of them seems to be right there going through that aurora connecting with the Shasta. And because the part in this area is all buried by tedious rocks that, are gossinous, but when you sample them, they're not very interesting. Now people are thinking we need to look at these cross structures. And this is why TDG Gold got this $15.5 million financing. They ended up issuing 30 million shares, 14 million shares at 82.5 cents. Charity flow through. Skeena is buying that back at 50 cents. There's a $4 million being done at 50 cents non-flow through, no warrants attached. So they'll have $15 million. Skeena is donating the Sophia of the project that's a bit to the east into the company for 8 million shares. So they'll end up with 22 million shares. They have not been given the board. They have seat. They have not been given any sort of stay at whatever percentage they have rights. They are kind of an opportunistic investor who recognizes this is something significant. They are a first mover to give money to TDG. And once I saw this money come in, they said, okay, now the company has the fuel in the tank to properly explore. Key thing is, I asked Stephen Quinn, are you going to be able to drill where the potential extension of this is? Or are we going to have to wait sort of 9-12 months to do dances with natives to see if we're going to get a drill permit? He says, no, area is covered by the existing permitting we've had for the Shasta area. Farther north, where there are also these potential cross structures that are on the Baker Shasta ground, where there could be where they've seen the epithermal stuff to the west, where there could be a porphyry system to the east. They may have to start applying for permits to that, but they have plenty of money to go to work in this area in the south, and they have a substantial, north-south strike of claims that they picked up during the early period. In fact, these were optioned even before this was put into the shell in 2021. That came from ArcWest Exploration, which is another one of my bottom fish collection. They end up having a 1% NSR after buying the other 1% for $2 million on that whole northern part of that package. And other ones like Thesis Gold, which has also been only focused on the gold potential of the ranch and the Lawyers project that they have. They haven't yet moved in the market either. They're also part of my bottom fish collection. All of this area is going to end up getting a lot of attention, especially when people start to understand what is it that made this Aurora thing tick. And at PDAC, there's now a special session where James Lang, a technical advisor to AMARC, is going to put forth what their thinking is about what's going on here, what is new and different about that, and what are the implications for a rethink of the entire Toodoggone district. So we've been buying the little juniors that do have exposure. There's no real land left to acquire because all of this has been held pretty much forever. So there's a limited number of choices, and the KRO individual members, which is available for $450 for all of 2025 until March 31st. We are having a fun time. It's like the good old days when this sector was vibrant and stocks took off and there was speculation. What does this mean? Looking at little clues in that. This is happening right now in this particular area, and I think it will spread to many other exploration regions of Canada and the United States.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.